We have a awesome webinar ready for you guys today with a good set of folks on the FP&A side, on the accounting side, and then Jake, who you will find is kind of straddling between both roles. So as we get running, would love for folks to drop in the chat. The whole webinar focus is going to be about accounting and FP&A tension. So would love to hear on a scale of 1 to 10, where is your current relationship at with your FP&A team if you're on the accounting side? With 1 meaning you're ready to divorce, and 10 meaning it is complete bliss. You're more like the folks over here in Ireland. So feel free to drop in your rating. No judgment from anyone on this panel as we get started. Also be a good way for us to check if our chat is working, which it may not be.
Working, should be working now.
All right. If somebody wants to pop in their honest beliefs, we on our side, okay. We have a 3. Okay, Varun, Nancy, cool. Would love to hear anyone who has a score over 5. If you have thoughts and tips, feel free to drop those in the chat as well. And we'll go ahead and get our slides up and running. Okay. All right, gonna go ahead and share my slides. Can everyone see what is on my screen? We should now be in present mode. Yes, perfect. Seeing a nod from Jake. So
Yeah,
hoping
looks good.
soon. Awesome. So focus of our webinar today is going to be on how AI and plain old teamwork can help unify the finance team. So on our panel today, I have 3 folks coming from very different vantage points of how to make this relationship smooth sailing. I will let them introduce themselves, starting with Jake. Would love a quick intro from you.
Hey, I'm Jake Sarton. I'm an assistant controller at Island, been here around 6 months. My previous experience has been working at from public companies to private equity to now a VC. Did various accounting and FP&A roles. And yeah, looking forward to talk to you guys.
Awesome. Parker.
Yeah, hey everyone. My name is Parker Gilbert. I am one of the co-founders and CEO here at Numeric. Prior to this, was running. Actually joined as the first finance hire at a company, so I think I sort of held both of the titles for a while, and then watched as the teams grew and the roles changed and friction emerged. And so really excited about this topic because I think it's something we think a lot about, and I think there's a lot of both practical ways to manage these relationships today, as well as sort of, I think, where these roles are headed that are really interesting and changing as AI kind of changes a lot of how we work generally.
All right, Albert, want to round us out?
Perfect. Thanks, Tierney. Great to be here with you, Parker, Jacob, and Albert, co-founder and CEO of Aleph. We're an AI native FP&A tool. And a little of my background, I was a management consultant, and then I joined a startup as COO, CFO. So I was in, a role very similar to like Parker, Jacob in the past, and I think now I'm like talking from the other side. But thanks for having me in your program.
All right. Well, let's jump into it. Roadmap for today is we're going to start with talking a little bit about the problem at hand, some of the common friction points that I'm sure everyone on this call has experienced. We're then going to spend the bulk of time walking through tactical solutions, things that Jake, Parker, and Albert have all found can help remedy some of those friction points. And then we'll wrap it up with future considerations. So we'll have a dedicated Q&A block. Will likely be the last 10 minutes of the webinar. But that being said, if you have questions, pop them in the chat. If you have comments, pop them in the chat. Always love to hear additional perspectives from our panelists. And then encourage Jake, Parker, and Albert, same thing. Feel free to sling questions at each other. Always fun when this all feels really conversational all around. Okay, so jumping into our first section here, we'll talk about some of the problem before we jump in to our tactical tips, beginning with Jake to talk about why things feel like on separate islands, which seems fitting given the name of the company we're
Yeah. So in my history working at multiple different companies, it's always been a kind of us versus them, accounting versus FP&A. And at my previous company was a private equity backed company, and my first week starting there, I just remember we did our closed meeting, we were presenting to the CFO, and then FP&A just started, drilling us with all these questions like, "Hey, this looks wrong, and didn't really communicate with us." And I was kind of taken aback. I was like, "What's going on here?" So I went to talk to him and I was like, hey, like, instead of you waiting to the very end and throwing us on the bus, let's work together and maybe we can improve something. And it was a very difficult relationship, but we actually, after a couple of years, we got into a really good rhythm. And so when I came to Ireland, having some of those bad experiences in the past is like, how can we start on the right foot? And that's one thing we've really accomplished well here is that, we implementing Aleph in Ireland, in Numeric, we are actually not, it's not an accounting tool or FP&A tool, it's a both tool. So we're both involved with it. And really like even our close, we even assign FP&A tasks in our close and have them review, like before we close the books, FP&A has to sign off on it. So we kind of really it's more of us as a team. You're only as strong as your weakest link. And instead of us being against each other, let's work together, and because we are on the same team. And so no, it's these two systems have really helped us out. So I'm glad to talk more about it.
All right. And Jake, we talked about a lot of the crux of this kind of coming from those time horizons. Any sort of comments on the perspective and root cause of some of the tension?
Yeah, I think it has to come to like accounting. We're more focused on getting getting the actuals correct, and not really about the geography or how it compares to budget or what the future. I always say accountants or actuals are the history, we're historians, and FP&A is about predicting the future and thinking forward looking. So those are two, and also your close is only limited to a week usually. So you have so much you have to get done, and usually accounting, we're going to prioritize on let's get the audit correct. Let's make sure we're good for the audit. But FP&A has some really valid points where it's like, hey, we need to use this for our board. We have these deliverables. If you don't have this detail, we can't present to it. So it is trying to understand like both of our different goals and how we can kind of do a Venn diagram where we can kind of link together.
All right, passing over to Parker and Albert. Would love, Parker, maybe starting with you, any additional commentary on some of those core differences and friction points?
Yeah, I mean, I think sort of like any different teams, there is sort of a delineation typically in terms of, accounting mandate versus the finance mandate. And I think sort of very simply, it's obvious, it's kind of usually drawn around sort of retrospective versus, forward-looking financials. But I think more so, I think it also is almost analogous to, even how marketing thinks about particular financial metrics and data they want to look at, and how does the sales team want to think about payback periods and ramping for reps and times and efficiency metrics, and the engineering team wants to talk about project costing and investments. And so I think the kind of point there is like every team, accounting and finance included, have their metrics and ways they think about financial data. Whether it's for GAAP reporting, for tax purposes, for audit compliance, or whether it is for board decks and operating metrics. And so I think it's really important in kind of understanding that it is both finance and accounting's job to understand what those metrics are, what that thinking is, how to sort of speak the language of the counterpart and the business party. And then I think the thing that sometimes is very unique to accounting, but I think you see finance influencing and even working directly more and more is like so much of this data needs to get structured by the accounting team. So much of the inflows of the raw data, how it gets posted to the GL, how it gets categorized, what it gets tagged as, how we think about some of the data hierarchies and systems. Accounting often owns a lot of that sort of top of the funnel kind of pipes coming in. And so I think the more that accounting can understand how finance wants it and other teams, enables them to think more critically around how to structure it, and then vice versa. If the finance team really understands how the data system is working and how a lot of the structures are put in place, they can play a much more proactive and impactful role in kind of helping the accounting team, get them what they need.
Yeah, I think, I echo everything that Jacob and Parker are saying. And I think just to add something, I think part of this being on different islands, sometimes it's like using we're using the same data, and accounting data or data that comes from the ERP is one of many sources that FP&A and finance use in order to forecast the future and see where we're at. And I think like more often than not, it is the same data, but it's like pulled in completely different ways. So I think there's something of those like systems and tools like ours, but also others are trying to solve, of like just having that one source of truth, and feeling like no matter how you slice and dice the data, the underlying data should be the same. And in the end, like everything should reconcile to, a entry in your journal ledger. And I think like sometimes with all of the, dozens of like manual steps that are between the source data and what actually gets presented, at some point that gets lost along the way. And it is like finance speaking different languages on the same data when they shouldn't.
Awesome. So I think covered probably most of these in terms of key friction points. Any that we didn't cover, the Jake, Parker, Albert, you want to briefly touch on or highlight before we get into some of the solutions? All right.
Yeah, I guess I'm good.
We covered it. Awesome. All right. So with that roundup of our core friction points between both teams, jumping into how do we move forward and begin to solve some of those tensions. So first up, Jake, with getting some of that foundational why that both Parker and Albert touched on previously, some of the tension between teams.
Yeah, so usually I always found like great success, especially at Island when I first started here, was, it was a very new team. We're just building out, and it was understanding like they're wanting to build financial reporting. And so I could build a chart of accounts like salary, you have your GL accounts in your certain departments, but it's also understanding what is this data going to be used for? Because accounting, there's more rigidness, but then like FP&A, there is more flexibility in how different ways to slice and dice it. They get asked different questions. So that was one thing I first did, was meet with our FP&A VP of FP&A and be like, okay, what is being talked about the board? What is your budget? What is your strategy? And how do we account for it to make sure that we're representing the data so you can report on that? And another thing I always saw was even not just FP&A, but working with, kind of being like an ambassador for other departments. So like working with marketing, sales, they all are budget owners and they all get questions about the budget or about the financials. So us working with them and showing that we're an ally, I realized, me extending an olive branch and helping them out, they give me a lot of more inside scoop on information that they might, or first to think us at accounting like we're the boogeyman and they don't want to tell us. But then when they realize, oh, I'm here to help them out, they actually give us more insight and actually makes our job more efficient and more accurate.
In our prep call, Jake, I loved the expression of you called yourself Switzerland.
Yeah.
To that point
Yeah.
of being this like neutral.
Yeah, I'm all about the
third
peace.
party,
Yeah.
which I really appreciated.
Yeah, I think there's oftentimes just sort of that dynamic to it, which is you do need to understand the sort of intent behind why someone wants data in a certain way. And I think there's so many comparisons to even like, how so oftentimes I feel like when we're building product at Numeric, you're hearing a lot of sort of requests from customers about things that they want. And obviously people have a very good reason as to how they want a change in columns, they want different views, they want percentages, they want very reasonable things. But then oftentimes you have to do your job to get to sort of the question of like, okay, well, why do you want these things? How do I understand actually what's the sort of driver behind it? And I think there is a lot of nuance obviously in how you account for things and how you structure your systems and how, if you're on NetSuite, how NetSuite works and the things you should do and shouldn't do, and staying on that sort of happy path. And so much of that I think is to this really great point, like building those real human relationships and trust and partnering, I think is really foundational to getting past even some of the more superficial sort of like, okay, I'm going to tee you up some data table that you can go run some metric. It's like some of those interesting things I think we did at my last company around unit economics and sort of driving a lot of our understanding of our payback periods and our SaaS metrics, like all came from how do we structured our accounting at the end of the day. It all came from how did we tag things and allocate things really cleanly and really simply to go drive more efficient analysis. And that stuff just all got harder as you introduce more people who are owning more discrete steps. And you start to see some of that understanding kind of disappear. So I just really like the notion of how important it is to have those like deep personal relationships with folks to understand the context behind what you're trying to accomplish.
Yeah, and for me, I think like that goes back to what Jake was saying around the difference between, hey, what's like GAAP, what's IFRS, and what actually like drives the business. And sometimes those are two completely different views. And for like GAAP purposes, I would like to capitalize R&D spend. Like there's a lot of like cool fancy things that like accountants do that I'm like impressed. At the same time, if I wanted to like do a management P&L and I want to drive decisions based on that, I would probably not do any of those in that same way. So I think like that's the part where something as simple as like asking, hey, what's like this number? If you understand how this is going to be used, you can have like drive completely the wrong answer. And I think sometimes that's slicing and dicing data in a different way. Sometimes, and that's the part I'm sure, Jake hates the most. Sometimes it means, hey, you know what, we actually need to change our chart of accounts because we're not like tracking and booking things at a granular enough level to have that nuance that is actually important for the business down the line. So I think, yeah, like data with that context is like meaningful, and like as accounting teams being like very, very close to the actual, raw interactions and what that means, they're like, I think, in a great position to actually like shape things in a way that is like useful for anyone using it downstream in some way.
All right. Well, with that, I think great segue into some of the systems components of being on the same page, having the same sort of operating system. Jake, would love to hear how the team in Island approaches this.
Yeah, so starting off with like numeric, it's really good to understand like our close process, understand our balance sheets, understand our fluxes. And one thing usually I use closed tools in other companies, but when we use numeric, the strategy was let's also include FP&A. Let's give them tasks. They have deliverables they have to do every month. They have a board deck. They have slides they have to prepare. And us also putting that in our closed checklist, it actually sees us so we know what are the deliverables for FP&A, because the worst thing for FP&A, and also why sometimes they'll be upset with us, is we close the books and the next day they have the board deck and they have to do all the slides at night. So us understanding where their deliverables are also makes us hold us accountable so we could give them in a timely manner. Also, it's good too because I always know, like, well, you're doing close, it's, you're working late, you're just trying to get all these transactions in, make sure everything looks good, your net income's correct, revenue, but we're not really looking at the granular level of FP&A, like what departments and classes, does everything look good in all these different slices? So FP&A always will do that review, and then I'll get a ton of emails, but I'm not really checking my emails because I'm closing the books. And then when I'm doing the close meeting, they're like, oh, this didn't get done, this didn't get done, and it kind of turns into like a sour taste after close. So what's nice about Numeric is that we have FP&A in there. We have them create notes or create checklist items, like one-time checklist items. They say, hey, you guys need to accrue for this marketing roadshow we have. And now when we do our close, before we get 100%, we have to look at and complete all the FP&A comments too, so we don't ever miss on those email chains or those Slack emails. So it's been very beneficial for us, and it seems like we're really walking. We're like dancing. We were dancing with two left feet. Now we're dancing like a good dance partner. We got the rhythm.
All right. Well, we won't ask to see the moves, Jake, but
Yeah, please don't.
maybe our next
Just
webinar
trust
will
me.
be,
Yeah.
will be Dancing on the Island, led by
Yeah,
Jake.
exactly.
Awesome. And then quick note here, I know we had talked about when you're thinking about implementing systems, one of the big hurdles to why other teams haven't done this is it can be hard to get a tool spun up. So I'd love to hear how your team thought about that.
Yeah, that's one thing, especially in like the PE world and VC world, is you're expected to do a lot with little time, and that's our biggest asset is our time. And so adding a new project when we already have so much to do is kind of a big undertaking. And what was nice about these two systems that really sold us was the easiness and how quick we get to leveraging the system. Like Aleph, they gave us like a free demo, and I think I had financial reporting done in like 2 days. And so it was really just like, because we had no visibility. Now we had so much different, deeper dives into the financials. FP&A had better looks. They were asking more questions and actually created more work in a way, but good work where we're slowly finding things that are like, oh, we didn't even know that was booked incorrectly, because now everyone has this access. And with Numeric, when we signed up, it was like a week before close. We were using it for the first day of close. And it was just, how that low hanging fruit of like getting a little bit of effort and getting a big result. But what's also nice about these two systems is kind of like Excel to me, is it's you could do a lot with it, but you still learn so much more about Excel, and the more and more you can do with it, is I learn something new every day. And that's kind of like with Aleph and Numeric, is that we use it, we did great, and now we're thinking, how can we do this more? And then we start seeing the more tools and stuff that the system has, and how we could better leverage our efficiency. So it's been a really fun ride.
All right. Well, jumping into a really tactical example of preventing reclasses, Jake would love to hear how you approach this.
Yeah, this was the bane to my existence at my previous company. It was every close. We could feel like when I first started, there was like a 30-day close. We got down to an 8-day close. We're all, pumped. And then we'll just have FP&A or our CEOs like, well, these things are coded incorrectly, blah, blah, blah. And like, he had all these different things, but none of us really knew. It was all known, like verbally, like tribal knowledge, but there's no actually written standard to AP knows, hey, this vendor goes here. And so, trying to build that documentation, working with them, it took like a couple years to actually get that to be a fine tuning machine. So when we went to Ireland, we're like, let's not get into this point. And with numeric, one thing was nice, they have these monitors where you can create these rules, and we work. That's why we have FP&A and numeric is like, okay, what are the things that you're always having questions on, or always like repeat offenders? Let's put monitors on there, and so anytime if something happens, like says, hey, this marketing expense got coded to a department of admin, it will flag it and it'll actually take you to the transaction in NetSuite so you can correct it. So that has been really good. And that's one of our closed checklists to make sure all the monitors are complete. And also Aleph has that too, where Aleph is just, so there's a lot of functionality with it where you can really customize it. Like one thing we're working on is our FP&A is creating a budget by vendor and then has it linked to our financials. So when it comes in, it could say this vendor is not assigned to one of these budgeted accounts. And that might be okay, but it gives us that warning. So we have even a deeper view of stuff, like maybe not even just like, hey, this always gets coded here, but sometimes we budgeted for here and it didn't get caught on the monitor. So there's a lot of robustness with it that really helps us communicate, and it builds that like feedback loop.
I think something to chime in there, Jake, which again, tying it back to implementation of, and I know what's your experience with numeric on this, but I know the left side of this idea of, I think these like monitors, as somebody's called it, for us, it's like called checks. Again, great feature. You didn't need to implement it on day one, right? And it's this idea of like being able to implement gradually and say, like, and I think like, accounting and FP&A folks have very different processes, but they all share this kind of like the weight of the monthly cadence of like, there's a couple of weeks of the month where they are like extremely busy. And then like a couple of weeks are, okay, I can take on 1-2 projects, make my life better for the next time around. So I think like, at least certainly I think a lot about that in the way that we think about implementation and product development is how can we reduce the friction so that people can get like a lot of things done in those like 1-2 weeks that they have reserved every month to improve things. And then but that means that like anything that you want to implement, any workflow needs to fit in those like reduced times. And I think like this is a great example of something that maybe it's not a must as a first go around of implementation, but like it's a difference between, okay, I'm like up and running and I'm already getting value, and like, okay, I'm doing all the bells and whistles, and now I have something that like feels like a very, very well-oiled machine. And again, I'm sure, Parker, you think about it in a similar way.
Yeah, absolutely. I mean, I think that's one of the really, someone was asking this morning about sort of implementation timelines. And I think sort of in a sort of somewhat unintuitive way, sometimes like the best implementations happen over 6 months. And it's not because it takes 6 months to sort of get to any value, but it's because you can actually sort of start to outline, hey, like our goal here is like, let's get better at closing the books. Let's get better at these things every single month. And how do we go through more of an iterative process to say, cool, this month, change management wise, we're really just focused on really thinking critically about dependencies and what can we move dates wise and how do we think about process. And next month, we're really thinking about, okay, what does it look like to get to completion of balance sheet recs for the first time? And the next month, we're really thinking deeper about controls and monitors. So I think the nice part, I think, to that exact point is you want to sort of get to value quickly, but then also recognize that even once you finish implementing a product like this, your goal is also to continue to just improve every period and be reflective around what's taking the longest, what's the long kind of tail of the thing that's taking the most time. Let's go sort of attack that this month, and hopefully the next month it is different, right? And
that's so we kind of use this analogy when we did the implementation is it's like going to the ICU. We need to just let's cure the patient and then let's get him to rehab. And that's kind of like what we did with the left financial reporting. Didn't have it. We need financial reporting. Got that done. Then so now we're outside of ICU. Now we're in the rehab, and it's kind of like close is like an ideal. You'll never be perfect, but it's every month you're supposed to improve on it, and you'll get close to perfect, but you just never will hit it. So it's a thing that's constantly evolving. And that's what I like about these tools is that you get so much, you can stop the bleeding with the implementation, the initial one with not much effort. but then you do so much more continuously. And that's something that you should just strive for your entire life, is like working out. It's just like, you're not just getting a six pack and you never have to work out again. You constantly have to keep on improving and keep on working at it. And it makes it fun too. So it's been, it's like I said, like I really enjoy the tools. It makes kind of doing the accounting kind of fun. So it's a lot of cool things you can do with this.
All right. Well, after those great metaphors, jumping in to the idea of getting into the weeds with data, Jake, I know you had a couple stories of where this has been really impactful with the FP&A and accounting relationship.
Yeah. So, one thing I've always would try to, like, my motto is kind of like turn us from a cost center into a value add center, not be reactive, but be proactive. And to do that, you have to kind of automate some of these manual stuff. Like I started this one job at a previous company, and it was literally like a 50-hour work week, and it was just building a report. And then on Friday, you send it out to the VPs and you had little time to look at it. And so people ask questions, you're like, I don't know. And then you look bad, and just, even though you worked hard on it, you still didn't get the credit. So I realized there I spent some effort in trying to automate, like, how can I make this report faster? And I was able to like automate it to get to like a 2-day cycle. I could get all my reporting done in 2 days, and it gave me 3 extra free days. And I didn't sit, do nothing for those 3 days, but I really kind of just, let me just read this and let me kind of play with this data and understand what's going on. And when you get into that deeper weeds, you start finding some trends and finding things. Like, we had one where one of our plants, their janitorial cost was really high, but year over year it's the same cost, so it didn't really pop out any of our variances. But when I started comparing it to other locations, like spend, it was like 300,000 higher than everyone else. And you realize there was maybe a little fraud going on there, and we actually were able to negotiate and get that corrected, and we had a big hard cash savings. And as being a cost center, we don't bring revenue, we're not the salespeople. So like having this is kind of our proof to say, hey, we bring some value. So it was a really awesome kind of experience, and it really shows like what we can do with the data. And then also they showed the budget owners, hey, work with accounting and finance. They can help us out there, and they can take us to the promised land. So
And definitely not Numeric's words
yeah,
here as a caveat, but Jake's words earlier of some of that shift. Anything you want to touch
yeah.
on with this transition piece of going from a bean counter to a business partner?
Yeah, so this is what motivates me every day. I was a plant controller at this plant in Muskogee, Oklahoma, and one of our HR guys always called me a bean counter. And I was like, I'm going to prove to him I'm a business partner. And so, like, how can I be a business partner, not just be a bean counter? And that goes to is like understanding the data, being a business partner, understanding the budget, understanding the deliverables, and be able to present the financials, but also work with those budget owners and be like, hey, here, like, you missed your budget here because of X, Y, and Z. Is the story because of this? How can we frame the story, and how can we come with a plan to fix it? So when you go up to the board, it's the actuals that happen if you missed, but you could explain to it, and there is real reason. So, like, understanding how we can position the story so we could keep on being move forward.
All right. Before we move on from this, Parker, Albert, I'm sure you work with tons of accounting and finance teams who are working on this same transition of trying to get to that business partner promised land. Any particular stories or tactics for similar accounting teams trying to make this leap?
I can go, Parker. I think for me, just like coming a little bit from the finance angle and what we see, I do think that this idea of, a lot of the data that you want to drive those decisions lives in the GL, and it's like an important part. But also like that, again, and like the best teams have like a lot of like nice automations where the GL is very detailed. It's never perfect. So I think for us, like one thing that we see in how accounting teams can use LF, and like it's getting more insights into that, like maybe operational data that doesn't make it to the GL. And sometimes, the best explanation from like a change that you're seeing in your accounting system comes from like Salesforce or HubSpot. And I think having access to that like cross-system data, I think it's massive in order to understand like, okay, yes, I see the number changing, but like why and why, how can I get the context to actually explain that well?
Yeah, I think very similarly with accounting. I think there can oftentimes feel like there is Yeah, I think the note you said and the one that Varun echoed in the chat, it's like there's so much hard work to go do to prepare the numbers to get to that point where you feel like you can be a business partner. I think so much of that work has to be really intentional on how do you drive that down to create the space for yourself to go do it. But like driving it down is necessary, but it's not sufficient, right? Like you do also then have to go further and say, great, how do I now sit down and do the next part of the job, which is building those relationships and understanding how do you go tailor things for other people's need. And so um, yeah, I think so oftentimes people feel so overwhelmed by the amount of work that needs to get done that it's actually quite hard to go both create the space and then think critically around the next steps there that really matter.
All right. Well, touching on the topic of the day of how can AI help with anything related to FP&A and accounting, Jake would love some of your perspective of what's worked, what's still hype. How do you think about using AI to help smooth over some of these tensions?
Yeah. I guess probably a lot of accountants or FP&A people have maybe my thought, but when I hear AI, I'm like, is this a buzzword? Is it really going to help me out? And one thing I really like about what Numeric and Aleph did with their AI is not as much about like the numbers and producing numbers. It's about like kind of I always say I like the numbers. I like building data reports. I don't really like spending time being a wordsmith. That's why I'm in accounting and not in marketing. That's not my strong point. And working with AI with the like Numeric, I have to write all of our accounting policies. Be a new company, we need to build these standards. It's a lot of work and it's very tedious and it's not the most exciting, just writing a bunch of accounting policies. But with AI, it gives you kind of like these prompt questions and it can get you a really good like accounting policy framework built out. And then you could fine tweak it like with the different numbers, like, hey, what are we going to capitalize? What's the threshold? And it makes it actually fun to do. Used to like accounting policies when I was first told about that, I was like, I don't want to do this. It does not sound fun. But having here, it actually makes it like, oh, it's kind of like a game. It kind of feels a little bit more like accounting and finance to me. And another thing is like with the Flux, with both these tools, they have this AI tool that can take the data. And one thing I like about Aleph and Numeric is a lot of companies are reporting tools or financial close tools. It's by the trial balance, which is great. Love a trial balance, but it only shows the summary. Here, they actually take the transaction detail. So when you leverage AI, it actually looks at the transactions by vendors, by departments, and actually kind of when you do these fluxes, it says, oh, well, your salaries, everything looks good, but sales department has jumped the past 3 months up 10%, and it kind of gives you like a good generic review. And used to, I just have to download all the transactions into Excel, create a pivot table, and manually go find these variances. Now it kind of does that for me, and so I get to spend my time instead of building this report, focusing on the analysis and focusing on maybe I want to wordsmith some of the commentary, but it kind of gives me the ammo so I can start working more efficient.
All right. Albert, over to you. Would love to hear, are there any ways that you've seen FP&A and accounting teams specifically leverage AI in ways that have been really tactical and avoid some of the empty buzz that I think a lot of people feel when they see the word AI?
Yeah, and I think this is like a small screenshot of I think the one of the AI features that we have gone deeper into, which is like variance analysis. And for us, what's important, right, is there's a lot of very shallow like AI where yes, there's a lot of like very cool places where you can like slap AI into like a process, make it a little bit better. But like there's a gap between that and okay, how can you help try and automate some of these workflows end to end? And that's kind of like the approach that we're taking. And for us, like one of the things that is interesting here is helping some of the process with AI also helps you like organize and structure things better and like force yourself to, think critically. For us, this variance analysis, you need to think about how you can train the AI into what are the dimensions that you care for the different accounts. And all of that is like, it's yes, you're training the AI to do the job for you, but at the same time, you're like forcing yourself to materialize a lot of assumptions that people have in their heads around how they go about the business. So it's also like, forcing you to organize yourself in some way, which is pretty cool.
Yeah, another thing cool about Left is I always had a problem with like when you have a reporting tool, you add a new chart of account and you refresh the financials. It's like 11 o'clock at night. You're ready to send it out and then it doesn't put. And you're like, what happened? And you're like, oh, I added a new account. I didn't add it into the system, into the reporting tool. So you have to go find the reporting tool mapping and then copy and paste everything. But with the left, they have this AI feature that kind of helps automate that feature for you, where it makes it less of a pain, where it's not as tedious. And, especially at late at night, the last thing you want to do is a bunch of copy and pasting. So having that AI feature is one thing that I've really enjoyed.
All right, well, rounding out our tactical tips with the concept of modular close, I know, Parker, that some of the teams that we work with employ this. Would love to hear a little bit about how this can be helpful with FP&A and accounting team dynamic.
Yeah, I mean, I think there's I think a lot of this comes back to sort of thinking through critically, like what are the actually real dependencies that exist in terms of different types of deliverables, and also, what's the threshold for, changes or variance or sort of perfection required to go deliver certain types of metrics and information. And so the ability to map out and say, okay, great, like, we have plenty of companies who really work hard to go deliver like a cash snapshot to the business on day one. Um, and so are the books completely closed? Is the ERP locked? No. But do you have enough context to be able to tell key stakeholders, here's how cash changed last month, here's how to think about it? Is that information really useful to go kind of be really timely on? Absolutely. And so sort of thinking through like, okay, how do you actually tie in the sort of reporting deliverables and the things that the business wants? And maybe sort of be less focused on sort of like what I think oftentimes are sort of like completely binary sort of perspectives of like, are we doing the close or are we doing reporting? And so I think you start to see a lot more of these things blending together in terms of work that can be interwoven, and especially with tools like some of the things that people like. We got a lot of great feedback on in Numeric is like you might kind of write an explanation or a commentary on a flux, but then if something changes, we'll actually flag for you what transactions got posted, that caused that flux to now actually change by 100K, and so that ability to give people sort of some of that commentary and understanding of, okay, maybe this account is kind of functionally soft closed, but if something changes, you're not going to be surprised about sort of the work that maybe you need to go address or sort of update.
All right. And to kind of recap this, I think the takeaway in the conversation with Jake and also with Parker and Albert is a lot of this comes down to the slowing down temporarily in order to really speed things up. And I think certainly a common thread with a lot of these, how to overcome some of the tension, the dynamic. All right, so rounding it out to future considerations in our last component of our webinar here. First, I'm going to go around and ask Jake, Parker, and Albert. We've talked a lot about tactical tips, but general advice for a new controller or someone new in their FP&A role. They want to get this dynamic right. What can they do immediately, day one? And I will start with Jake.
Yeah, so I always say, like, I found great success is knowing your data. First thing I do is I pull the chart of accounts, that all your different dimensions. So like in NetSuite, we have department, class, location, subsidiaries, understanding all the different data and all the different accounts and how do we use them, understanding all of our data sources. So like we use Salesforce for our ARR. How does that get calculated? How do we calculate ARR? Like all the deliverables, what are the formulas to calculate everything? That's just a big one, just so you understand when you're having these conversations and you're thinking about how to improve things, you have something grounded of like how the system's actually designed. So when you're talking about something, you have those context clues about like, okay, I get what you want to do. How can I actually do in the system? And having that ammo really does help a lot. And then, it's also having those communications and kind of like the ambassador of working with FP&A, understanding their goals. And I really think to be a good accountant nowadays, you have to be good at FP&A. And the best FP&A person I worked with, named Raul, was a really good accountant. I don't like telling him that, but he could really he'll find mistakes, and it was hard for me when I had to admit that he was right. But it really helped though when he understands what we're going through and understands that detail, it makes us communicate so much more efficiently. So it is understanding FP&A accounting, working together, but also understanding what does the executives, how are they thinking about the business? What are their strategies? And as accounting, could get lost in the debits and credits. So having someone give us those inputs. So when we're doing something, when someone's like, how do I code this invoice? I could use all the information that I heard from other people, from stakeholders, be like, well, this is why they're doing this. This is the reason what we want to show. Code it here because of X, Y, Z. And so it's really good to have like not just the hard data, but also the soft data as well.
All right, Parker, anything to add for advice for a new controller or someone joining on the FP&A team?
Yeah, I mean, I think I think sort of very general, sort of big onboarding advice that I certainly think we see a lot at Numeric is like, first, it's really important to go build credibility. It's really important to go develop a track record, and oftentimes it's less important what you do initially. It's just more important that you do it well and you communicate effectively and you score some points. And so I think what I think that oftentimes doesn't look like is showing up and saying, "Wow, we're going to go rebuild our chart of accounts today because that's what I want to do, and this is what it looked like at my last company, and everything you guys have been doing is wrong." Like that's probably not the right place to start. Like it might be required. Like there's a very real reality that might be necessary, but you usually want to build up to that. You want to go say, great, like let's go find some small wins. Let's go find some places I can go deliver value to folks. I can go develop those personal relationships, and then let's go start to chip away at okay, like guys, like if we want to go do these next 10 things most effectively, like we have some big changes we need to go make. And that's, I think, where it comes back to, again, sort of understanding your data and the structures and how this work is going to be done so you can become that sort of fundamental owner of the financial information and how it gets utilized. So sometimes I think like small is beautiful when you get started. Because there's always somewhere you can come in and get a quick win.
Yeah, actually, I agree with that. I call it like goodwill. Is sometimes you get these big wins and you build up like so that your bosses will be like, oh, have some confidence in you. So then it actually affords you to make more risk in the future because if something does slip up, they're like, hey, he did a lot of good work for us in the past. Like, because mistakes do happen. Sometimes you're afraid to make changes because you don't have that goodwill built up. So yeah, that's a really good point.
So I think I echo all of that. So I'm gonna take a slightly different angle. I do think that like what Jake was mentioning about almost like understanding your data, building bottoms up, super, super important. Depending on what you're facing and what's your starting point, it can also be overwhelming. And sometimes yeah, you join like a company very early and everything is like like clean. But more often than not, you will join something, and if you're there like to make things better, it means that they maybe weren't as good to begin with. So I do think like starting with the end in mind for me it's very important, and it's like yes, there's a lot of things, and over time, like reporting requirements, like slices and dices become like very, very comprehensive. For any business, there's typically 10 to 20 metrics that are the only ones that like really, really matter. So I think like starting with from those and almost like pulling the thread of like, okay, what does my CEO and like their investors care about? Okay, they care about like CAC payback. Okay, let me unplug and let me understand, okay, where does CAC payback come from? Oh, like here we have this like reclass that we maybe need to do in order to do this better. So I feel like starting from the outcome in mind, like pulling from there and accepting that like in order to get some of those quick wins, it might mean that like there's some area that I need to overlook for a few weeks, and like that's fine, right? And again, that's like a good way of prioritizing where you can have the most impact the fastest.
All right. Well, last question for our panelists that we'll go around to is thinking about the future of the FP&A and accounting dynamic. I'll start with Parker, talking a little bit about where you see these roles headed.
Yeah, I mean, I think I think so much of the theme of this whole conversation, which I love because I feel like I've felt a lot of, and personally a lot of the sort of friction that gets created, I think is a perspective that is I think we're sort of starting to see in finance and accounting AI I'm making a bigger impact. I think it's still super early. I think a lot of it is still marginal. I think it's like some of the things both Albert and Jake mentioned around variance analysis and technical accounting. Like there are real places today to go get leverage and to go do more with less and to push harder with fewer people. And I think I think we can start to see that trend. I don't think is going anywhere. So these teams are going to continue to get leaner, and we're going to be doing more with fewer people. And I think to that point, what I think is really exciting is you kind of get back to sometimes things are simpler when you have more context in one person and in fewer people, and how you can start to imagine some of these roles being redefined. Where if you're actually saying, look, I understand accounting deeply enough to be able to go in and make changes to how we're coding things and managing, our segmentation and allocations, because I also know, and I'm working on some of the SaaS metrics that maybe a finance team typically owned, but you're seeing accounting teams more of owning today, or I'm really deeply in the budgeting and planning conversations. I think the general point is like I don't think it's crazy to think that these roles may start to merge, increasingly so over the coming years. And you see more and more folks kind of finding a bit of a gray area between finance and accounting that didn't typically exist. And I think it's almost becoming a requisite. It's like find folks on FP&A teams always like they need to understand accounting. Like you cannot do your job if you cannot get deep into understanding accounting and unwinding some of the really annoying gap changes and adjustments that you might need to make. And I think it's going to be similar with accounting, where it's going to be increasingly hard to do an accounting job without understanding the operating metrics of the business and what really makes it hum. And so I think the folks who are going to be really successful as these jobs change are the ones that can kind of flex, that can learn quickly, that can go actually think about a broader depth of context. Because one of the things that I think is exciting is like there will be less pain booking manual adjustments. Like there will be less time and less distance spent in just some of that preparation and sort of more grindy work that some folks spend the first 3 years of their career doing nothing but. So as that work sort of comes down, I think it's a really exciting time, because I think it will enable people to get more exposure. And then the people who do really well with it are going to see themselves become really valuable and really compelling and effective in a business. And those who can't are going to struggle, I think.
All right, Jake, would love to turn it over to you. Do you agree with Parker? Anything in particular that was resonant or that you disagree with for where these roles are headed?
No, I actually agree a lot with him. I've noticed that too in my career. It's there's not much people who are just like specialized like used to. I've seen some people like, I'm only finance, I don't deal with debits and credits, don't care. And then you have accounts like, I just want to do debits and credits, don't care about the finance side. But to really be successful nowadays, especially with the data requirements and all the information, like back in the day you just had Excel, or before that you were on piece of paper you had to write your journal entries on. Is now like the financial modeling is so robust and everyone is KPI heavy focused. So to be a good at accounting, you have to understand what are the financial metrics, and also it's not even just the accounting or the financials, it's the head count, it's the sales force, it's the pipeline, it's other things that are just not just GAAP. So to really be good at accounting, you have to have a strong finance side. And to be good at finance, you have to have a strong accounting side, because accountants write the book and finance is reading it. So they have to understand like what all the thought that goes into it. So I think it's actually good for the industry. I think it's fun. I don't like to be pigeonholed on one side or the other, but I think having that hybrid, you get the best of both worlds.
And I think no, I like completely agree with all of that. And I think for me, maybe making a comment on how AI will come and change all of this. And I think like, Jake was doing this great analogy of it used to take me 5 days to put the report. And then I had like 10 minutes to actually like do a quick check before I send it. And then like I cannot add any critical thinking. In the next 5-10 years, AI will do everything, right? Like AI will do the analysis and will be better than us at critical thinking and so on. But like the process of getting there, I do think that there's going to be a lot of like a state where AI is great at like automating all of that tedious work, and the critical thinking is what matters, and like the understanding the business. And I think like both finance and accounting, like this idea of, I think you had this prior slide turning I like of like the bean counter to like more strategic partner. I think like the technical side will be worthless, right? Because all of that, like, AI can read all of the ASC like standards, and like you will grade at that, and like, it will read faster, remember everything, and doesn't matter. And the same with like, you will be able to build financial models better than we can. But I think like connecting it to business outcomes and that part of like critical thinking will be key. So I think like excited for, which I think is also more fun, right? Like, I mean, that's the part where like, Jake, in your day-to-day, you probably like that part more than, when you're copy pasting data.
100%.
So I think it's like, again, like people that, like Jake that are great at that are going to be like, 10x more productive. And that will open the doors for like, hey, maybe I'm not only doing numbers, I'm going to like sit with the business and actually help them think of like, should they invest in this or not, and be involved in those like the higher level decisions in some way. So again, I think it's going to be exciting, and again, finance and accounting people have this naturally like analytical ability to be like very good at numbers, and I think they will have much more over time a seat at the table at making those decisions, because I think there's a lot that they can add.
I also think too, like in finance and accounting, you have this high pressure of being perfect in a way. is because we're the last people to send like the results. We're grading the paper of what the company did that month, and we're sending it to the executives, and we're the messengers in a way. And we feel like everything needs to be perfect. And like to the point of me working 40 hours just to get this report out, had 10 minutes to kind of send it over. Also, another risk is like, what happened if I fat finger something, or what if there was one mistake? And because there is that happen, then they find that one mistake, they always do, and then they discredit you in a way. So you're so nervous on just so many different levels. So you're just always high on stress. So like having things to automate, and you can really digest it. You also catch, oh, this looks off. Oh, there's this mistake. And so when you actually present it, you have more confidence. And I noticed my stress level has gone down too. So I'm not worried that, oh, is there one problem on here that's going to make us look bad?
It would be a great, Jake. I don't know if you use any wearables, but like maybe if you use like we can correlate whenever you started implementing, Aleph and numeric, and any change in your like your Apple Watch or
Yeah,
on your
yeah. You can
device.
see my heart rate is I have a lower resting heart rate. It's really nice.
Yeah.
My
Just
wife's happy.
tangible
Yeah,
health benefits.
yeah.
Save you.
My doctor loves the
Might not
American
save you
Aleph.
5%. It might not save you 5% on your spend, but we'll save you 5% on your lifetime.
Yeah, yeah. And your health insurance.
That's actually Parker, we should run some ads with that of like
Yeah, my doctor prescribes.
Jake's blood pressure over time, and like we put the elements in the chart.
Yeah. It has definitely. It's true though, because it is a high stress job, and anything to help ease that does go a long way. It's great actually getting 8 hours of sleep. It's kind of nice. It's kind of weird, but it's a good feeling to have.
That's
All
great.
right. Well, what a good note to wrap things up formally on. If folks have time to stay on for maybe one or two questions from the chat, I know we're right at time. If anyone has any questions that are top of mind that we didn't cover, happy to jump into those. And actually do have two that have already gone the Q&A. So we'll start with Varun's question. How do you all see the future of technical accounting with AI? For example, booking accounting estimates relative to E&O inventory or sales reserves, where the accounting guidance is very specific and requires a significant amount of judgment into its application. Anyone in particular really want to take this one?
I'm happy to jump in. I think I think this is one of the most interesting areas is I think sort of to Jake's sort of point earlier on drafting memos, it's like I wish AI existed when I went through my first audit. Like, man, like that it was just a grind, and it felt like a lot of this stuff should be pretty quick. But I think to this point, like what's really interesting, and I think we spend a lot of time thinking about, is that sort of translation of how do you go from sort of like how something conceptually should be accounted to the judgment, to the debits and credits and those sort of processes. And I think I think there's I still think it's kind of fuzzy, but I do think there will be very different workflows that are going to start to get created where you can actually go somewhere now and say, cool, I want to go upload 20 leases that we have, and I want to go write a policy that takes them into account. I want to go abstract those leases and generate the schedules, and generate even the chart of accounts and create them and map them and structure them. And I think there's like there's such this really interesting place where so much of that judgment can be done by LLMs pretty well, but and sort of how you connect it to the underlying data systems is where I think we're going to need to see different types of systems and UI and UX and experiences to help folks manage that.
All right. Next question came from Zach on any tips on how to make accounting data better for AI interpretation. We've updated our chart of accounts, put more effort into descriptions, and use various custom dimensions to aid in FP&A reporting needs. Curious if any of you have other methods you found success in on focusing on improving data for AI use.
I have some thoughts. I can chime in. I think for me, like Zach, all of the ones that you're mentioning are great. I do think that in general, for me, the main advice that I give is that, and this probably works with either AI, numeric, LFs or others. I think like AI is great at like, understanding unstructured data. So yeah, the more you can codify in custom dimensions and say this is exactly, a vendor or a customer, like all that is great. But like if you cannot get there like with reasonable effort, just like making your descriptions like any automated description you can bring from other system, you make it like 3 lines long, it doesn't matter. AI will be great at like taking and interpreting that. So I think like just pushing the data to the AI and like making it available and adding as much detail as you can I think like that's for me the bigger value add. And then it's like, we always struggle when we're like helping people when like just the data is not in any systems, and it's like, it's not, but like unstructured data will welcome anytime. And that's something that like AI works very well with.
All right. And our last question that we have up, unless Jake, anything you want to add from that? Want to give you a chance if your
No,
team does
I think with AI also it's just like working, like doing a post-mortem. That's another thing we did a lot with our close is after we get done with our close, we talk the next week. It's like, okay, what went well, what didn't? And that's when you start thinking about your data, because AI is also about repetitive tasks, like making sure the data is always clean going in. So finding things like mistakes and then fixing it. And I don't think you'll have like sometimes this is like a slower burn, but like from a year from now, you're going to have a very well-tuned machine. But it's that post-mortem that's really important. I think a lot of times I've never focused on the past, but here we have great results. Is also think about how did the close went. Usually we don't close, we think about the next close. But it's also like what went well, what didn't. Let's come up with tasks to like not have those same mistakes go to the next close. And those mistakes don't get done. And then we find new mistakes. And it's just you slowly kind of just iron out that process. So it's just really just having a good hygiene of just kind of working and just collaborating, not just on the close, but after the close as well.
Awesome. All right, our last question, tactical one, probably makes sense to send over to Parker, of what monitors should a small company focus on to set up on Numeric? So any tips for small companies setting up monitors?
Yeah, I think I think a lot of the initial use cases we oftentimes see are very data hygiene oriented. It's a lot of segments, allocations, missing vendors, departments, these sorts of things where you want or require certain information for downstream purposes. But the ERPs do not make it easy to go set up those rules or administrate them, or just don't have those types of controls. But then I think a lot of that goal should be kind of to Jake's point about postmortems. It should be really getting into a habit of, okay, what didn't go well this period? What did we miss? What questions did someone on the finance team have? And that's where I think you start to see much more bespoke and custom and interesting things. Or when we went through an audit, what came up, right? Like we see folks, looking for certain text in memo fields, like reclass, because they want to double check that there's attachment, there's the right attachments or evidence for the reclass because they know their auditors are going to come in and ask to sample that, right? So I think a lot of those can come from sort of, okay, what are those scar tissues or places where things haven't gone well? And if you get it, it's more efficient to get that stuff right in real time than fixing it, down the road.
Yeah, some of the monitors that we use that we really like is one is like department expenses with no department, or marketing expenses not assigned to a marketing department. Those are just ones for those data hygiene. But then there's stuff like for our accounting policy, fixed asset policy. We say, hey, anything that's over $1,000 for like equipment can be capitalized. So sometimes it could have the vendor, department, everything, and they'll still hit the P&L. And then you do this review, and it's like, oh, we had this $10,000, car we purchased or something that needs to go to fixed assets. So we have something there. It's like, hey, look for all bills that are over $1,000 that are hitting these certain GL accounts that usually have fixed assets in it. So it's another way to make sure that the P&L is reported correctly, and that could really help your EBITDA out sometimes. So that's always a big, especially in the private equity world, that was always a big one for us to look at.
Yeah, and I think no, okay. No, I was gonna add one more like on like what we're seeing maybe outside ERP data. I think like we see a lot of people using it for data quality and data cleanliness on the CRM. So like the typical examples that we see is like, the AE has if you are like more sales driven, there's an opportunity that the expected close date was 2 weeks ago, but it's still open. Okay, that's like typically an error, and typically someone wants to go and update that. And I think again, more than the initial set, I think the idea of every time you catch a data error, you should build a monitor or check for that. I think like that's the probably most important takeaway here.
Yeah.
All right. Well, with that, thank you to everyone who attended. Thank you to Jake, for Albert, to Parker, for hopping on the panel, sharing your insights. We will be following up with the recording of the webinar to everyone on today, as well as a quick highlight reel, sort of condensing some of the key things that were from each of our speakers. If you have feedback, thoughts, we'd love to hear them. Feel free to respond to the email that we send out. And yeah, appreciate everyone's time and hope everyone has a wonderful rest of their Wednesday.
Sounds good. Thank you.
Thanks,
Y'all take
everyone.
care.
Thanks,
Thank you.
folks.